There was a lot of uncertainty in the political scene and the macroeconomic environment. Interest rates were up for majority of the year. There were a lot of things that made a transaction a little bit less favorable, a little bit more risk to the unknown going forward. And a lot of folks put the pause button on that. In 25, from the communications that I've had and from what we're seeing here, we're expecting it to be a positive year. Those that were sitting on the sidelines over the past few years with pent-up capital are anxiously waiting to put that money into the market and deploy and get to work. Those that have had businesses held for potentially a longer cycle than they would like to, for whatever reason that might be, are looking for ways to actively put that business into market going forward in 25. I think the first quarter starts out still a little bit slower as people get through audits and they get companies positioned well. But for the second half of the year, I'm expecting to see a lot more activity across the broader lower and middle market.
Yeah, no, I feel like that's pretty consistent with what I've heard is, I think some people thought, Q1 was going to be, hot out of the gates. I think it's been a little bit more tempered than some people maybe have thought, but the sentiment is kind of like Q2, Q3 should be kind of, pick up the pace as far as deal flow goes.
Yeah, and it's interesting, right? And a lot of types of businesses that we're pursuing are, not necessarily following the lines of the market always, right? So again, you go back to what I was saying around family ownership dynamics. If there's a health issue or if there's just an aging business owner that's just getting fatigued with the business and tired and ready to do their next thing, go travel the world, whatever it might be. Those types of events can be one-off and not necessarily follow the broader market that we were talking about.